All right, we are back. All right, we are back. So, let me get rid of this real quick. So, happy Friday. Good morning to the Streamverse, to whoever finds this is out there, decides to join, whatever it may be. This is for you. 1 second. Happy Friday. Good morning to the... So, yesterday we talked about what is MakerDAO, what is the DAI purpose, what is this token, and more importantly, what is a stablecoin. And there are two stablecoins that sit above all, USDC and USDT, US dollar coin, and Tether. And while Tether is the largest, they are definitely the most, let's just say, secretive of the two. They aren't as public about what they do. And USDC, in my opinion, has a bigger backer, better standing than USDT with the public. We'll kind of go through why that might be, why I believe that, but yeah, let's just dive in. So let me move this a second. So how USDC is Coinbase's holy grail. USDC is Coinbase's holy grail. It is the stable coin that you need to know about. So before diving in, very important for us to refresh and go back over what is a stable coin. A stablecoin is any cryptocurrency that attempts to equal the value of another fiat currency. In this instance, we're going to use the US dollar. So USDC, USDT, they are all stablecoins of the US dollar, but there are also stablecoins that are one-to-one with the euro, the yen, and so forth. So what is USDC? In this case, the USDC stablecoin is meant to equal the US dollar. This means one USDC token equals $1 US. That is the entire goal. To create USDC, a company called Circle buys what's known as short-term assets, like treasuries, bonds, state bonds, government bonds. These government bonds act much like a CD. So if you ever go to a bank, they have certificates of deposit where you can put your money, you buy a CD or you deposit your money into a CD where it's locked for a certain amount of time. And you can't get your money out without penalty until that time period is up. And so these CDs, these savings accounts, these money market funds, they all buy these short-term treasuries. That's how they are able to keep the value equal while also offering you an interest rate. And so these government bonds pay a fixed amount of interest over a certain length of time. Because they are short-term, right? So USDC and Circle, so USDC is backed by these short-term assets. Circle is buying these short-term assets because their duration, the time that you must hold them before they come to fruition, is between a month and a year. Nothing more, nothing less. When this was written, I think it's a little bit lower now. It's probably around like 4.5, maybe 5. But when I wrote this in 2023, the short-term interest rates were around 5%, meaning that if you had bought $1,000 worth of treasuries today, you will have gained $50 a year from now. So again, these short-term interest rates, these government bonds, if the interest rate was at 5% on these government bonds, and you deposited or bought $1,000 worth of government bonds, a year from now, you would have gained 5% in value. You would have gained an additional 5% or $50 a year from today. These government bonds are, as we'll see, what make up the value of this US dollar coin. So if you have $1,000 worth of treasuries and you want to have tokens that equal the same value of the US dollar, that you have the stable coin, you would then have 1,000 USDCs. So again, they're not dollars. You just have 1,000 USDC tokens and $1,000, $1 per token. This interest comes into play later because if they want USDC, if people want these USDC tokens and they're giving me cash for it, and then I'm going to buy these treasury bonds to back up this asset, well, this interest rate is there, this 5% interest rate, something's got to be done with it, and that is ends up being either a return to the owner, the investor, and it also becomes a revenue generator for Circle. So please note the short-term interest rates are not always as high as 5% and tend to fluctuate throughout the year. Again, I think they're at 4.5% right now, maybe even lower. So this 5% interest rate, something's got to be done with it, and that is these short-term interest rates are known as risk-free because the government will always pay you back for those bonds, including their interest. The risk of the government defaulting is very low, and so investing in these short-term assets, these government bonds, are considered risk-free. If the government was able to pay for the bonds, if the government wasn't able to pay for the bonds, the government would be in what's known as default, and the US government has never defaulted on its debt. So back to our example, let's assume Circle buys $1,000 of one-year treasuries at 5% interest. So the return on these treasuries is 5%. They would create $1,000 worth of USDC, which is 1,000 USDC tokens, because one token is supposed to equal $1. Let's say they do this on Ethereum. And so now they have 1,000 USDC tokens on Ethereum that they can essentially sell to the open market, one token for $1. And now they have this 5% interest as a kicker. Well, let's dive a little bit more. Let's see what is the ins and outs of USDC, what really makes this ecosystem go. So why stablecoins? What's the purpose of people even using stablecoins? What do they provide? Okay, cool. You can bring $1 on chain, but the dollar's already digital. Why use these stablecoins? So outside of buying other cryptocurrencies on the blockchain, these stablecoins provide a number of benefits to users who decide to use them. Number one is they allow consumers to pay for goods and services at prices they are familiar with. So instead of having to think of ways in their head or go to an exchange and exchange Bitcoin for Ethereum, whose prices are always fluctuating, and they're having to calculate how much ETH is equal to how much Bitcoin. Ethereum and Bitcoin are already have US dollar pairs. People can buy them with US dollars. So if you have this USDC or you have these stable coins, it's much easier for you to see what the price of an asset would be in relation to an asset that you hold. Stablecoins provide crypto traders a safe haven during volatile markets, as they don't need to sell for cash on an exchange. Remember, this is not cash. This is a cash equivalent. It is a stable coin. And so in these realms where people are using decentralized exchanges, or they're not wanting to cash out to US dollar directly, they're not wanting to sell for US dollar, they can convert or swap these for USDC or other stable coins. And so in times where the market seems to be fluctuating immensely, or having a volatile time period where you don't know where the price is going to end up tomorrow, a lot of investors, a lot of speculators, they flock to these stable coins to park their cash, to hunker down until this storm blows over, right? Until this volatility becomes more manageable. And number three, these stable coins allow those without access to US dollar abroad to access and save in US dollar. And this is probably one of the biggest use cases for stable coins that we are seeing an impact from today, and that is currently being used today, and probably the biggest use case of stable coins ever. Take a country, for example, like Venezuela, where the value of their local currency becomes increasingly worthless over time due to inflation. At the time that this was written about a year ago, the value of one Venezuelan peso was equal to 2 cents. Okay. And because many people in the US access US dollars, they use US dollars every day, they don't really understand the concept or can visualize the concept of what it means to live in a country where you don't have access to US dollar, where you don't have access to a currency. And not that even the US dollar keeps its value over time. As we know, the US dollar has inflation, and this is what causes people to invest so they don't lose their value. But imagine having a currency like a peso where it is inflated away in mere seconds, and you have your life savings, you have your assets all held in this peso. And so what these stable coins do is it allows people to get access to a more stable currency, stable coin. It allows people to get access to a broader bunch of assets and more secure and more reliable assets, so that they have other means to save, and even more so have access to US dollar, right? In the global market, oil is bought and sold in US dollar, the petrol dollar. And so even assets abroad, right? Even if they're buying groceries, if they're buying things online, they're probably going to want to use US dollars. And so by bringing these stable coins online to Web3, you're allowing people abroad who don't normally have access to US dollar get access to these products. If we assume the above, we can think the following is true. As more people adopt crypto to pay for goods and services and use to pay off credit card debt, Visa has expanded stablecoin settlement to using USDC, the necessity for USDC in circulation will increase, right? So as more people use these to pay for goods and services, people are going to want more USD in circulation so that they continue to use the cryptocurrency or the stablecoin. As more people use and trade cryptocurrencies, they will look to stablecoins as their safe havens as crypto volatility increases. Again, as more people come online to trade, so not only are people going to be using crypto and stablecoins to pay for goods and services, they're going to be trading and speculating more, so they're going to need a stablecoin to flock to. And then third, as phones and internet become more widely accessible across the globe, more people will want to have access to US dollar, requiring more stablecoins on chain. So we can simply look at this and say, okay, we know that consumers are going to use this to pay for goods and services. So more people that use this, the more that they're going to have to create USDC. As more people flock to cryptocurrency and begin to trade and speculate, more people are going to want a stablecoin to cash out in. So there's two use cases right there that where you can see the increase of USDC. And then lastly, as people abroad want to gain access to US dollars or US dollar equivalents, and more people get access to the technology to get online, again, you're going to have more people wanting to access US dollar equivalents and stablecoins, requiring the minting and production of USDC. And so there's this constant feedback loop of more people to join the network, either more people that are going to use USDC to pay for goods, or more people that join crypto, or more people that just get technology around the world. There's all these different reasons that are pointing to the need and the use of these stable coins to continue creation in perpetuity, right? To continue minting and buying up short-term assets to continue creating USDC or other stable coins. So, as we can see, the necessity for stablecoins on chain will continue to increase, and as such, more stablecoins will have to be minted. Circle will continue to purchase treasuries to match the increase in demand for USDC. Although the interest rate on these short-term treasuries will fluctuate, and they are not as high today as they were a couple years ago, Circle will continue to take a part of this yield as a kicker for themselves, but also they have other methods for creating value for not only their business, but for stablecoin holders, such as, you know, a yield on their stablecoin if they hold it in certain places. Just to help you envision this, if I'm Circle and I'm garnering 5% off of this $1,000, number one, this money's not coming from me. It's coming from the customer, right? They want $1,000 worth of USDC. And so while I might not have their money up front to mint or make this USDC, I'm going to do that with my own 1,000, and then they're essentially paying me back. And so I minted this USDC for free for you know, I'm not putting up this money, right? The customer is buying the USDC from me, so we're backfilling the hole that we used to make this USDC. But then on top of that, we're earning an interest on these short-term treasuries for free, essentially, right? This isn't money that we're buying these treasuries with our own, right? This is our customers. So this interest that we've been talking about, the interest from the short-term treasuries used to make USDC, the stablecoin, Circle gets to keep that interest from the treasuries, all of it, pure profit. If treasuries are paying 5% on a year long duration treasury, that 5%, that $50 goes straight to Circle. And that may not seem like a lot, but if you multiply that by a few billion, so instead of $1,000, you do, I don't know, a couple billion, 2 billion, you do 5% on that. Now, again, not all of the treasuries are going to be at 5%, and they have different maturity dates, but you do the math on that, and you can kind of figure out where 3%, 5%, somewhere, some average in the middle where they might be earning their interest revenue from. And so to sum it all up, Circle buys these short-term treasuries and creates an equal amount of USDC on Ethereum. They then keep the interest that money is earning from these short-term treasuries as a pure risk-free profit play. So again, excuse me. Again, if we're going to envision this, Circle says, hey, I have USDC. They say, hey, I have USDC. It is 1-to-1 equal to the US dollar. I'm going to take $1,000 and I'm going to make more USDC for my customers. So I'm going to buy $1,000 worth of short-term treasuries. And I'm going to put 1,000 USDC tokens on the market. And I'm now earning 5% off these $1,000 worth of treasuries. 10 people come in. They're like, I want $100 of USDC from you, Circle, please. And they take $100 from these 10 people. They give them each 100 USDC. Now Circle has that $1,000 back. They just bought these treasuries with their customers' money. Now they're earning 5% for free off of these treasuries. If people want to cash out from USDC, they would of course have to give them their money back. But this is where years of this pure profit play come into play. They would have some savings and reserves. They'd also have cash from operations and cash from investors on reserve to cash out investors per se in instances like this. But for the most part, it's a pure play on this profit. Now this part is interesting, but let me take a sip real quick. So there's a picture here. Coinbase plus Circle. Where does Coinbase come into play? What about Coinbase? What does this have to do with Coinbase? Coinbase owns a portion of Circle. Okay, as such, Coinbase receives a part, with some rumors saying around 50%. This might be even more in recent years, of the yield that the treasuries produce. So again, if they're producing 5%, Coinbase will get 2.5% of that. Not only that, Coinbase offers various products surrounding USDC, such as users can deposit USDC on Coinbase and earn around 4 to 5%, which they can then lend out. So again, if Circle's buying these treasuries at 5% interest, Coinbase is saying, okay, if you leave your USDC on the Coinbase platform, we'll give you about 4% interest, right? It's like a savings account. We'll give you 4% interest back. And Coinbase and Circle still get to keep 1% for themselves, but by providing the savings account, users can now see, okay, now I should probably buy more USDC. I should continue to buy USDC because it can act as a savings account either domestically, abroad. But not only that, we can now lend out our USDC to other people who want to take out these loans. On Coinbase, you can exchange and allow people to buy USDC for US dollar, and then conversely, you can trade this USDC. You can trade this USDC on Coinbase for other crypto assets. And so Coinbase is really providing this central place for USDC users to use their USDC to buy, to sell, and even earn a yield on top of it. So not only does Coinbase benefit from the minting of USDC, Coinbase provides viable on-ramps to USDC by allowing users to purchase and use USDC in various manners. They also provide valuable training material to further promote adoption of the stablecoin. Additionally, as more people on-ramp to crypto and the more that become familiarized with USDC, the more people will use USDC. Again, this positive feedback loop. The more people that use USDC, the more people that borrow in USDC, the more treasuries that are bought, the more yield that is able to be garnered by high yield treasuries. It's this positive feedback loop where more people join the network, more people decide to use treasuries or want digital assets backed by treasuries instead of an algorithmic stablecoin like DAI. You're going to have this positive feedback loop where more people are going to want to use USDC, more USDC is created, therefore more people are going to use it, and it's going to grow this stablecoin ecosystem that Circle and Coinbase have. Oh, forgot to mention, if you've ever heard of a money market account or money market fund, it's a type of savings account. It's not called a savings account, but it's very similar to a savings account, and it's operated in a manner very similar to what Circle is doing for USDC. If you go to Fidelity, you go to TD, well, I guess that's Schwab now. You go to any of these brokerages, you will see money market funds. And some of these brokerages even park your cash when you deposit onto their platform. They park this cash into a money market fund that you then choose how to operate from. But while it's in that money market fund, it is still earning you a little bit of a yield, maybe 3 to 5%. And these operate in the very same way that Circle's minting USDC today. If you put money in a money market fund, they are buying short-term assets, treasuries, T-bills, whatever it may be. And they're saying, okay, for every dollar in this money market fund, one share of this money market fund is equal to $1. Sound familiar? The only difference is these money market shares aren't being bought, sold, traded, transacted on open infrastructure or anywhere else, right? Only within the brokerage can you buy and sell this money market share, right? This money market fund share. You can't go to Subway or Visa and buy, pay off your credit card or buy a sub with these shares, but you could with USDC. So fund managers invest in short-term treasuries and in turn sell shares of the money market fund to investors for $1, as we said. Investors can buy, sell, and move money out of money market funds, all while a share in the fund itself is meant to remain equal to $1. Again, one share of a money market fund is always intended to equal $1. And there was some issue with this, I believe it was in the 80s when there was a run, and the peg of money market funds decided to no longer equal $1, but there's some guardrails in place so that doesn't happen again. So one share of a money market fund is intended to equal $1. Sound familiar? Investors use money market funds as a way to remain more liquid than being locked up in buying these bonds themselves. Remember, if you buy the bond, the treasury bond, or you even lock it up in a CD, you have to find another buyer. While bonds are still liquid, they're not as liquid as cash. And because these bonds might have other things attached to them, such as a conversion or an interest or a lockup period, in a money market fund, if the fund is holding these assets, people can buy and trade these money market fund shares at a much faster clip than they would if they held the bond themselves. And same thing goes for USDC. So a money market fund and USDC both aim to equal $1. Yet one is widely accepted by banks, financial institutions, and governments, I wonder which, and the other faces regulatory scrutiny at times because it's a crypto asset. So even more so, in the modern fiat era, central banks use government bonds as their primary assets. They can invest or they can park money in these money market funds. They have money market funds that are worth billions and trillions of dollars because so many people park their money in money market funds on these brokerage platforms. And so all of this meaning that treasuries are literally the sole reason banks are able to lend out this cash, right? It is their safe haven. They are able to park this money in these treasuries, in these money market funds, because they know, all the banks know that the U.S. government is not going to default on its debts. We control the printer for the U.S. dollars, right? So at the end of the day, we could print more. That is figurative. It doesn't mean that we're actually going to the mint and printing more U.S. dollars, but they're creating more treasuries whenever they want to pay back debts that we still have. So either way, that's just something to think about when considering USDC, to know that it's very similar to something that we use every day, that these large institutions are using every day. There is one thing to note that isn't in here, but one thing that Coinbase has, and if you check out the narrative analysis on Coinbase, is that Coinbase is a custodian for a lot of these ETFs, right? These crypto ETFs, these Bitcoin ETFs, ETH ETFs. And so by being a custodian of these ETFs, it means that Coinbase is holding the underlying assets for these exchange traded funds, right? So all the Bitcoin that's backing a Bitcoin ETF, Coinbase would be holding it depending on whose Bitcoin ETF it is. But they have experience holding large sums of these crypto assets, and they have a robust security architecture. And by saying this, it's simply showing that you have these large enterprises that are trusting Coinbase with their crypto assets, with their business essentially. And so Coinbase now holding and being a part of USDC, you can essentially link USDC to Coinbase. Hey, USDC, while it is Circle's, it's also Coinbase's. And if Coinbase has a stable coin that many institutions, many people find reputable and find that they trust, USDC is going to find a way into people's hands because it is trustworthy, it has been used before, it has a record of truth. And when you're using a currency, that's all people ask for, even a fiat currency, right? People trust the US dollar, they know it's tried and true, but they're not so sure about using, the Chinese yen or a peso, right? A Venezuelan peso. They don't know if they can trust it to hold their cash or their earnings in. And now that we're having a stable coin created by a large enterprise, and now again, this isn't saying that they're creating money, because they're not. They're just creating a way for money to be used on Web3. But by creating this and now having USDC as a part of Coinbase, Coinbase is they can essentially act like a bank. Coinbase can now issue USDC. They mint it on behalf or with Circle. And now their users and their customers can deposit USDC on Coinbase for a yield, like a savings account, which is done in US dollar. So USDC on Coinbase can earn 4%, or USD in your savings account can earn 4% online bank. They are banking the unbanked. That is what this all comes back to. Coinbase has found a way, whether domestic or international. If they're international, they have to have access to Coinbase, obviously. But they have now found a way to get people to leave their crypto with them. So multiple areas here, okay? Number one, Coinbase gets a percentage of the fee earned by the creation of USDC. So by making 1,000 USDC, Coinbase is going to get half of that 50% profit. Okay, that's number one. Number two is they are getting people to deposit USDC on Coinbase. And so now Coinbase can use this USDC to go invest, to go lend out to other people or in other areas and earn yield on that as well. And you might be thinking, well, why is Coinbase going to allow the investing of these assets? That's what banks do. Banks take the money that people leave with them and invest in other assets. So Coinbase is getting the yield from the mint. They are getting the yield from customers depositing. And then the third one is they're getting the yield from users trading, right? Because they're on Coinbase, because they already have tokens there, or because they're going there to get USDC. Coinbase is now getting a fee from trades, transaction fee on people using this USDC to buy assets or trade for other assets. So that's three ways that Coinbase and Circle, well, really Coinbase, is able to garner revenues from this Circle USDC partnership. And it really goes to show that, man, Coinbase they know their shit. They've been in it. They are finding ways to generate revenue from assets that isn't just trading, right? Coinbase, a few years ago, their whole entire revenue model was based on people buying and trading cryptocurrency assets. And now they've kind of moved away from that, where I'm sure if we go back to a report, it's probably like 50%. They probably still get 50% of their revenue from trading. But then the other 50% being lending, stable coins, you name it, right? Any other asset that any other revenue stream that's not from trades and whatnot. But we are at time here. It is 30 minutes. Again, happy Friday. I hope you learned a lot. If you ever find this out in the interwebs, stable coins, you name it. Whatever, what it do, deuces, pair does. Happy Friday, y'all.